Hello, fellow traders. 'Tis I, the Rumpled One. It is Wednesday, September the 30th, the year's 2020. Let's talk trading. I noticed this is also the monthly wrap up, but we're going to do Walmal on Walmal. Now, just so you traders know, these videos are for educational purposes only. Your results may differ from mine and from Walmal's. Trading is extremely risky. You can lose all of your money. If you need trading, investment, or financial advice, seek the advice of an accredited financial professional. Furthermore, always trade with your stop loss in place. Never lose more on any one single trade than you're willing to lose on a single trade. So, Walmal's on the line. How you doing today, Walmal?
Doing great. It's been a good day. Been fun trading today. Made some money. That's always a good thing. So I hope that everybody else out there that's been trading has done the same.
Now, the reason I've got this Walmal on Walmal is because somebody asked for a video about the Walmal method, and when we were talking beforehand, you said, didn't we do that for a whole month?
Yeah, I think it was back in March that we did that. We did every single day for an entire month. We went in and we actually tracked even some trades. So one of the things I would suggest for folks to do is go back and look at those videos, because there was a lot of really good information in there. Go back and watch all those videos. Yeah, you're exactly right.
Well, we've got about 4 minutes to the top of the hour. Maybe you could describe the Walmall method to the traders out there. Because see,
Okay.
go ahead.
Yeah, I can go and do that. Let me go and even step back as to why and how it got developed. And the idea behind it is that what I want to do is I want to go and trade at lines that have some type of significance. And significance, what I mean by that is that they got a zero on the end of it. It just, for some reason people like to place trades at 10, 20, 30, 40, and so I started looking at that from that perspective. Then the next thing I did was I went and looked at statistically. I used your frequency distribution indicator, and came to the conclusion that every hour on the pound dollar, that it generally moved somewhere between 13 and who knows what the top end of it, but it moved somewhere between 13 and something. And that told me that, if I get into a trade and I take a trade at a break, of one of those 10 lines, then I got a really good chance of making some pips. Now, I may not make a lot of pips, but I'll make a few pips. So that was the creation of the idea. It was just to go and just take the break of those lines. And so what I did was I started trading it, and over some time developed some rules around what I needed to do to go and make it profitable and work for me. And I think that's the most important thing, is that I had to go and trade it and see what works for me, because you had a number of methods that are out there very, very similar to what I was doing, but slightly different. But I needed to do what was profitable for myself. And once I had done that, then I was as they say, history got made. So, but describing the actual method itself, what I do is I just wait. I look at the 5-minute chart, and what I do is I wait for the top of the hour, and I wait for a cross of either for instance, right now we're sitting at 59, and let's say this was the top of the hour. I'd be waiting for it to cross at 60. Now, in the beginning, what I would do is the very first cross, I would jump in and take that trade. But over time, what I've noticed is that sometimes I seem to get a better profitability if I just go and wait for it. Okay, let it cross, let it come back down and close, below it, and then wait for that second cross. Yeah, that takes me out of some trades, but it also, some profitable trades. But it seems to take me out of just as many, if not more, losing trades. But the second part about it is that what it does for me is, I'm like most people. I don't like to take heat. I don't like to be underwater. And a lot of times what happens is if I break the 60, like it just did, it broke that 60, and it dropped, 3-4 pips down. Now I'm sitting there. If I had taken that trade, I'm now sitting there, 3-4 pips underwater. That hurts. That's not a pleasant feeling to be under. I just found that if I just wait for that second attempt at it, that a lot of times that I didn't have to go underwater like that, and that's why I added that little rule, a little nuance to it. So I think that was one of the biggest changes from all those videos earlier. The next thing I like to do is that as I'm trading it, if I'm in profit, I have my rule of 10-5-1. My goal is to get 10 pips on a trade. That's what I want. That's what, if I get a good trade, that's what I'm getting on a good trade is 10 pips. And once I get to 10 pips, I take my stop loss and I move it to 5. And then that way, I'm guaranteed of at least getting half of what I need for a daily goal.
Hey, just to let you know, we're at the top of the hour, so now we've got 60 to the north and 50 to the south.
Correct. So now that's exactly right. So my entry lines are 60 and 50, and we'll see what happens. And the thing is, we opened up somewhere around, I'm assuming somewhere around 57, something like that. I don't have it on
55
right now, but okay. So So I'm not biased in any direction other than what is the direction of the hourly candle. That's the second most important thing, and actually probably even the most important thing, and that is that I'm not going to trade against the hourly candle. So let's always trade in the direction of the hourly candle, and the reason why is because, if the hourly candle is going up, why would I go and look for a short trade if I'm looking for a breakout trade? Because that's essentially what the Walmal method is. It's a breakout trade. It's not a reversal trade. It's a breakout trade. So I need to be going and trading in the direction. So like right now, that hourly candle has turned red. So I'm looking for a break of the 50. I wouldn't, and that's just, it's pretty obvious. And the thing that's nice about it is by setting your entry points at 50 and 60, what happens is that, you almost have, especially in the beginning of the hour, you have to be trading in the direction of the hourly candle, until it crosses that 60, and then maybe you take a trade, you want to go and take a trade to the short side of that 60, then you're trading against it. But right now, from the beginning of the hour, you need to be trading in the direction of that hour. So the idea is, once I get to 10 pips, if it drops down to 5 pips, I get out. Once it hits 5 pips on the way up, I move my stop loss to break even +1. And what that does is it just means that, I got a really good chance of at least getting 1 pip. Now, I know a lot of traders have problems with that. Well, that means that, you take 1 loss and you take a loss of 10 pips. That means if you may have to go and take 10 trades in a row to get that. Well, technically, I guess you're right. But the reality is that more times than not, I may take 2 or 3. I may go and get 2 or 3 break-even +1s, but a lot of times I also get a 5, and a lot of times I get a 10. So that's okay. And and just so you know, I win about 80% of my trades. Between 70 and 80%. So yeah, I may get a lot of break-even +1s, but that's okay. And it doesn't harm me or my psyche or anything like that. I'm willing to go and take those small little wins. That's fine with me. In terms of the losing side, my stop loss, my hard stop, is at 10 pips. But what I generally like to do is I like to get out at 7 pips. And the reason why is because if it happens to be moving hard against me, I can go and get out at 7, and if it runs past the 7, I still don't hit my 10, and that's the reason for that. My other rule on getting out on the losing side is once I hit +3 pips, I make a decision. And the decision that I make is, do I stay in this trade or not? Okay? If I'm at +3, and I think this trade is a good trade, I move my stop loss to -3. So the most I can lose on the trade is -3. And what that does is it mitigates some of the losses that you may go and take, and you don't get those big losses and don't get those big hits. And that's the whole idea, is you want to go and minimize your losses. The next rule, what I think, and by the way, these rules are posted on the Crestlick, and they're also posted on the Facebook page. But the next rule that's important, and I think it's a very important rule as well, is that I say in the rules, I always look to the left. And what do I mean by looking to the left? Well, if I know that I'm going to take a break at a 60, but over the last, couple whatevers, every time it hits the 60, it rebounds off of it. Well, maybe I don't want to go and take that trade. Maybe that's a little bit risky of a trade. Why do I want to go take a trade, say, into traffic? If I see a lot of congestion, why would I take a trade and take that risk? I know one trader was out there saying that, back testing, it didn't work very well. Well, here's, I think, the biggest reason why it may not work very well on back testing. On back testing, that doesn't happen. You can't go and do it. You go and set up something, to go and run a back test on it. It's not able to go and take you out of those trades that you don't take. There are a lot of times I'll go and take it. By the way, we just crossed the 60. And so I believe that's the second time. I'm not sure. It's either the first or second time on the 5-minute chart. So now we'd be looking to go into that trade. So now I just actually entered that trade.
Yeah,
okay,
I entered already.
Okay. Yeah, and so now I'm in that trade. I'm up right now about a point and a half, 2.5 pips, something like that. And now I'm up 3. I've now moved my stop loss to -3. I think this trade is going to be a decent trade. I'm now sitting at 4 pips profit on my chart, and I'm sitting here saying, it's stalling. What do I do here? Okay, I'm up 5 pips right now. Okay, do I stick or do I go? Well, I'm going to stick it and see what happens. My break even is now moved to break even +1, so the most I can lose on this trade is 1 pip. So we're up now 5.5 pips.
Yeah, now just for the boys and girls out there, Walmal uses a different broker than mine. That's why when he says he's up versus what I'm up is slightly different.
Right. I'm up 7 pips right now. I'm up 8 pips. I moved my break even now to 5 because I'm close enough to that 10. So I know that right now I can't make any less than 5 pips.
Yeah, I've got a little EA I wrote because I wanted a button so I could close all trades at once since that feature isn't there. And I put in it moves the stop loss to break even +1. And no, I'm not sending out the EA. Don't even ask. You can't buy it from me.
I'm now up 17 pips. 16 pips.
16?
Yep. We're up to 76.
Wow, it just changed on my chart. Okay.
Yep. I just got out with 15 pips of profit.
That was really great that okay, why is my computer not now it got me out. That was we couldn't have planned that better, huh? For a video.
No. But the thing is, what I did there was, as soon as I went and hit 15 pips, my stop loss got moved up to +10. I went and hit the 17 pips. I think it actually even got up to 18 pips, and I started to start to run down. And I said, you know what? I don't need any more than this. Let's just go and get out. And because a lot of times you get a big run like this, you look at this 5-minute candle right now. 5-minute candle has got a range of 20 pips. That's I know you, Tiro, you look at that, you call that a return bar. There's a good chance this thing's going to run right back down to where it started out. Well, you know what? I'm going to take my profit off the table before it goes and decides to do that. And that's why I went and jumped out. So, I got 15 pips. I'm happy. I'm happy as a clam.
Yeah, we just left about 5 on the table.
That's the thing. We were teasing each other before with Rogo, because we had both gotten into a trade before and we left a bunch of pips on the table. But I think that's a framing of mind thing that you got to keep in mind, and that is that, I went into the trade to go and make a certain number of pips, and I can't look at what I could have had. I got to look at what I did get, and just keep that in mind. And I usually do a pretty good I'm usually pretty good at that. And say, you know what, I want to get 5 pips on this trade, and I got 5 pips, and then it ran up 10 more. That's okay. That's part of trading. That's you're going to get that because you stop playing those head games. Next thing you know, you stay in a trade longer than you should.
Yeah, well, Walmal, the fastest 15 minutes in trading, it just happened. So, fellow traders, I hope you like that Walmal on Walmal with the live trade shown there. But remember, results may be different from mine and Walmal's, because these videos are for educational purposes only. So just keep one thing in mind. It's not what you trade, it's how you trade it. So go out there and drain the banks.